Hey traders, it's Greg from Trade90X, and today is Saturday the 8th in the morning. And again, I hope everyone has had a productive week. I hope everyone's had a profitable week. And again, if you're not, start asking questions. Go to hello@trade90x.com or go to our Trade90X Instagram page profile and you can book a 15-minute free call. Listen, the only way it's going to change is if you ask questions. Remember, I can only lead the horse to water. I cannot make you drink it, and I don't know what you're thinking. So again, please, go to hello@trade90x.com or book that that free 15-minute call at a minimum. Again, we're here to help you achieve your goals. Now, again, whether it's a pre-market, post-market, lesson, weekend, monthly plan, it's about the same thing. I am a stickler for process, and you must, again, also that repetition, that discipline. You must have a plan that's simple, easy to execute, and it must have an edge. If you do not have an edge, then your plan is not something you should be following. Again, here is my trade plan every day. This is what you need to snapshot right here. And what I recommend is if you go to our YouTube channel, I'm putting up a lot of new videos right now on our strategy. And as you guys know, I call it the Earn the Right to Trade Live process. And I'm putting more videos every day about the steps within that Earn the Right to Trade Live. So again, it's free. Make sure you like it, share it. And again, so you show us that again, that this is information you want. Also, this will help with the YouTube algorithm. All right, cool. Let's go back to the information. Now, again, it's always understanding the key points. And if you guys know, what I care about is number one, do I understand the rules of engagement? And I talk about it every day, how the markets work, how we can make money. Number two, is my strategy back tested with an edge? Yes, it is. If you're part of the Trade90X community, do I know my numbers? I talk about the numbers every day. I'll get to them in a second. We're talking about active trading. Next, do I understand? Remember, markets can only move up, down, or sideways. Do I understand what bullish momentum, bearish momentum, or range price action looks like? Do I understand, and have I mastered, if you're part of the Trade90X community, you will have I mastered what the high probability statistical edge setups are within a bullish or bearish momentum, or if a range is part of my trade plan in a range? And then next, do I understand what no edge choppy price action that I have no business trading that gives me no edge? Okay, these are the things that you're going to learn when you're part of the Earn the Right to Trade Live process, whether you're trading a 1 minute, 5 minute, 15 weekly, or monthly. The other thing that you need to understand is what type of trader am I? And when you're part of the Earn the Right to Trade Live process, we'll work with you because everybody's different. It's all based on your personality, time, and resources, but there is a right way to approach it and a wrong way to approach it. So these are things that you'll learn in the Earn the Right to Trade Live process. Now, another big part of our success is our routines. Now, we're here in the East Coast, so we have a pre-market. This is where we do every morning, our pre-market plan. We do it between 7 and 8 a.m. Eastern. We like to trade between 8 and 12 Eastern time. And then our post-market is where we journal and review after we finish our trading. Now, I also like to do what's called a pre-market. And this is something where I call get your mindset right. And that's usually between 6 and 7 a.m. Eastern. And this is where I look to meditate, work out, maybe do some cold bath or showers, drink a lot of water. Again, get myself ready for that mindset. And again, if your mindset's not right, I tell you, every day, do not trade. All right. So make sure you snapshot this. Any questions, hit us up at hello@trade90x.com or make sure to book that free call at Trade90X Instagram page profile. And then also, please always discuss with your financial advisor or accountant about risk and capital, and make sure you have 6 to 12 months of emergency funds before you start risking capital. Okay, are we clear? Cool. All right, so make sure you have the snapshot. Let's go see how we're going to make some money today over the week, looking back what happened during the week and then what's happening moving forward. All right. The first thing I always like to look at is on the weekends, Now, I usually look at econoday.com for news, but on the weekend, I go to forexfactory.com. I go to right here, the calendar, and I want to make sure next week that we have what we're looking for. So starting here, but then I go to the filter, and I'm just interested in the US. Take this off, and I only am interested in the most important news. And again, this is what's going to be going on for next week. Monday, not much. Tuesday, bond auction, but then we have core CPI. We got FOMC on Wednesday. We have another on Thursday. So again, Wednesday, Thursday, and Friday of next week are going to be big. Now, you guys already know, if you've been listening, if you're new, welcome. I do not trade into news and earnings. We let news come out, and our hope is that news will move quickly to one of our ace setups that we're looking for. We clear. Cool. All right, earnings again. Not a lot on the calendar, but we still have stocks like Oracle, Broadcom, Adobe. Those are important, stocks. So just keep an eye and always pay attention to when the news and earnings are coming out. Next, fear and greed index gives us the short-term sentiment. Right now, you can see we are sitting in right now kind of the neutral area, just kind of still that short-term indecision. Crypto is the bias is right now in greed. That tells us we have more of a bull bias in the short term. Okay. Next, barchart.com. And again, my goal every day is to understand who has the control, bulls, bears, range, and then figure out those A setups going with the power of the market. And the first thing I always do is look at data, but the most important thing will be with the charts. But the data tells us under the hood, again, who has that control. Okay, that's part of our edge here at Trade90X. Okay, go to market momentum under stocks, and what I'm looking for here every set before the session, what is the long-term trend, the 200-day moving average? It's bullish. What is the short-term using the 20 and 50? We have more of a bearish short-term bias. Now, I will also look at FinViz. I look at the heat map, and again, I want to see what the day before closed at, and we had more. Still, we had more of a, what I would say, a bear bias because we closed below the open on all of them. Now, I look at the group tab, also the sectors. Now, 1 year, half year, 3 months is going to be your main trend. We're bullish. The short-term trend, you can see monthly, weekly. Now, one day doesn't make a trend, but we are definitely more. We have a lot of indecision here, bearish, bullish, bearish, bullish. So I can just tell you when we have that, in the short term, I am going to be focused on my scalp and day trading. When we have in sync the main trend with the short-term trend, then I feel much more comfortable about my swing trades, whether they're bullish or biased. Now, one of the other things that's very key that you learn right away in the Earn the Right to Trade Live process is the main trend is your smart money. Okay, that's where the banks and institutions control the markets, not retail traders. When the main trend is bullish, the highest probability is always looking for those short-term pullbacks to go long. If the main trend is bearish, looking for those short-term pullbacks to go short, and that is going to give us definitely the most edge. Now, one other thing that I need to bring up here is tradingstir.com. This is your commitment of this. Again, we look at data that helps gives us an edge, who has control. Now, we know based on what we're looking at, but this also tells us that smart money and all the key indices. Now, I like to look at the indices, starting with the S&P, and you can see right here, right now, that the banks, institutions, remember, smart money controls 85% of the order flow in every key symbol. Okay, look right here. I don't care what they tell you on YouTube or on CNBC. 87% of the smart money right now is bullish on the S&P versus 12%. So until I see a personality change, all I can say is that long-term dips are still in play to the long side. Okay, I don't have to guess. And again, you don't need to guess. You need to learn the information we show you every day, every weekend, so you can make high probability statistical edge decisions every day. Are we clear? Cool. All right, next. Stockcharts.com. Right here. Now, again, I love looking at stockcharts.com because they have these predefined groups, and I can quickly show you the main trend versus short-term trend in a click of a button. And you can see right here, got the Dow, S&P, NASDAQ, FTSE 5000, NYA, and also I have Apple here. I have the VIX, I have the 10-year, the dollar. I also have commodities, oil, and gold. The most important thing ones to me, though, are those indices. And what is that VIX telling us with the 10-year and dollar, especially the VIX? Now, remember, all I care about is who has the control. Do I understand what bullish, bearish range look like? And do I understand what the statistical edge setups? Remember, bullish is lower left to upper right. Bearish is upper left to lower right. Okay. Ranges equal highs equal lows like Apple. Okay. Now, in bullish and bearish momentum, we're looking for those momentum legs into pullback and pause. Those pullback and pauses is where we find our entries. And if it's not clear, we have no business trading it. In a range, now remember, it doesn't matter if you're trading a 1 minute, 5 minute, 60-minute, weekly, monthly, bullish momentum, bearish momentum are the same, ranges. Equal highs, equal lows. I do not want to trade the middle of a range. If a range is part of my strategy, I'm going to look at bullish rejections that are obvious at the bottom third, bearish rejections that are obvious at the top third to look to fade those. And I'm going to trade those until price proves it can get back to bullish or bearish momentum. Guys, it's the same thing I talk about every day. Why? Because this is the stuff that works. I don't need fancy indicators, okay? You don't need tons of money to trade. Less is more. The myth of trading large, trade small, trade less often, you will make more money. And if you're trading with a statistical edge, like we use at Trade90X, then you're going to put the probability in your side over the long term. Now, we know that the long term is bullish, the VIX. Now, when the VIX is coming down, okay, with bearish momentum, that is bullish for markets. If it is bullish, it is bearish for markets, sideways, indecision. Right now, we can see we're moving lower left to upper right. Let's go to the short term. Now, remember, when the main trend is up, the highest probability trade for us is looking for pullbacks to enter long. If the main trend is bearish, the highest probability is looking for entry points, pullbacks to short. Now remember, bullish is lower left to upper right. Bearish upper left to lower right. Ranges equal highs equal lows. What we're looking for is which symbols have the most obvious bullish and bearish momentum setups. Those are the ones that we want to focus on. So when I look at the Dow right now, we can see that in the short term, we're having some short-term pullback. Now, we never broke this double bottom, but we're definitely not, we're kind of sideways. Now, if you look at the S&P, NASDAQ, and the FTSE, look at that, lower left to upper right. That is bullish. Okay, what do we look for? Momentum into pullback and pauses. Okay, the last really nice pullback and pause was this candle right here, and I'll show you more when we get to the charts. So right now, the S&P and NASDAQ are bullish, FTSE 5000 bullish. Look at Apple. Lower left to upper right, we now have that momentum into pause. We have a setup candle right now, and Apple, if the markets are bullish on Monday and Tuesday, we could have a nice setup on Apple moving higher. Next, you can also see oil, upper left to lower right. Again, it's bearish. Don't fight it. Again, if the main trend is bearish and the short term are bearish, then that's the trades I'm looking for. Okay, because let's just say the S&P, the main trend. Let's just say the main trend was bearish, but we're short-term bullish. Then this means I'd be taking counter trend trades. Now, when I talk about counter trend trades, I will say this: if you're a newer trader, the only thing you should be doing is taking trades when the main trend and short term line up for the highest probability. And counter trend trading is only left for people that have mastered price action and have proven consistency, and they've back tested both going with the trend or counter trend trading. We clear? Cool. But right now, what we see is the main trend is up, and the short term is we've got kind of indecision. We have bullish and bearish. So you can see right here, NYA, in the Dow, kind of having some sideways indecision, but the S&P and NASDAQ, it's beautiful. I mean, we're moving lower left to upper right. Okay. So absolutely, the S&P and NASDAQ, if you're going to be bullish, that's where you want to be. Okay. Next, now that we understand that, now let's go to the charts. All right, so first thing I always do is we always start with the S&P because it represents 75% of the market. And remember, your main trend is going to be kind of your weekly, monthly, and I'm always matching it up with the data, the commitment of trader report. I'm looking at right here, 200-day versus the short term, and of course the sectors, okay? I never leave it to chance. I'm always looking at the data. And then remember, your job is, if I'm looking at the monthly above the main trend, what is price doing? Is it bullish, bearish, or range? Remember, lower left to upper right is bullish, upper left to lower right is bearish, equal ranges or, or ranges, but we are moving lower left to upper right. Now, let me get rid of this. Where is that? I don't want that on there. All right. So remember, short term, I have a momentum band. It's a Keltner 10 MA. It's all off the shelf stuff. No, all I use this for, and the 200-day moving averages, you see right here, if I'm bullish, I want to see this band sloping up, and when it's above a sloping 200, you know you've got good bullish momentum. The exact opposite for bearish. If the momentum band is moving down and the 200 days above it sloping down, then you know you've got a very strong bearish momentum. If we have the band going sideways, then we know that we have range price action, okay, within a bullish market because you're above the 200 and vice versa for 200. So right now we're bullish. Let me take this all off. And again, our job is lower left, upper right. Now, the reason I use line charts is that I want to see those momentum pullbacks at or above for bullish or at or below. Okay. Again, it's not rocket science. It's just helps me find the trades. Now, what we look for, and you'll learn more about this in Earn the Right to Trade Live, when we have obvious bullish price momentum or bearish price action, I'm looking for those pullbacks at or above. And now the candlesticks that we like to use are bullish, engulfing, pin bars, or dojis into those. If it's bearish, I want to see the band sloping down. I want to see momentum at or below, red engulfing, shooting star with the wick on top, or dojis into those two. It's not rocket science, but it takes repetition. So right now, if you were trading the monthly chart, here were your two setups right here. Now, this is kind of an indecision candle. So if we get a follow through above this, we could have a nice trade moving higher. Okay, let's go to the weekly chart. Okay, I do the line chart so you can see it. And again, the question is, are we bullish, bearish, or range? Well, bearish, range, bullish. Okay, now what's going on? Lower left, upper right. Let's go put on the candles. Here were the setups. Setup 1, setup 2, setup 3 right there. If you were trading the weekly chart, those were your 3 setups. And until we really get some kind of break and retest above, right now, there are no trades. And again, this is how we break it down. We look at it. We don't just trade to trade. All right, so we know now that the main trend is up. Let's go look at our shorter term trend. Let's go look at the line chart. Take all this off. And again, your job is to determine, are we lower left to upper right? Well, we're lower left to right. Yes, we are. And we can see those momentum into pulling. We got the sloping momentum band above the 200 sloping up. And we have the pullback and pause. Now we put back the candles. And where are the trades? Well, for me, you had one here, here. And now, if we had a double doji here, but if we really got to get above this. So if we get above that, then we can start looking for trades. But again, it's black and white. We have no trade on the daily. There's some sideways pause right now. All right. So right now we know that the main trend on the S&P is up. We know that the short term is up, but it's in kind of a short term pause. Nothing to do until we have, until we can break higher. Now, let's go to the 30-minute. So take this off right now. So we now also look at charts, and I do a top-down approach with our monthly, weekly, and daily. But then we also have what's called the Trade90X Earn the Right to Trade Live one chart view. And this came from you guys asking me, hey, Greg, I love what you guys do, but listen, if I have 1, 5, 10, or 15 symbols, is there a way to use one chart and have and use the strategy where we can quickly determine from the one chart, are we bullish, bearish, range, or no edge? And I thought about it, and I came up with the Trade90X Earn the Right to Trade Live one chart strategy. And again, this strategy, number one, any good strategy, you have to know the rules of engagement. Well, if you're part of Trade90X, you understand the rules of engagement, how markets work. Number two, you need to know your numbers. I've already gone over that. I do it every day. Number three, you should have a set of tools that are predictive. Now, these tools are all off the shelf. They're all predictive, not lagging. And these tools are here before you even get in. And we have very precise bullish, bearish range, and when there's no edge, sit on hands. And then we have a 3-step process. Now let's go through the tools, the setups, and then I'm going to give you the steps. And then we're going to go through a bunch of symbols. This works on any symbol or asset class, and it'll quickly tell you whether the main trend is bullish, bearish, and then the short term. So the tools that we do, and I do this every day, is the yearly high low is in gray, the monthly high low is in orange, the weekly high low is in purple, and our short-term bias, the previous day's range, is in black, high low, the midpoint is in red, your previous day's close, this dotted line, and the overnight open or your USA open is in aqua blue. Okay, so now you know what those tools are. Now, the previous day's range is your short-term bias. Now, anytime we break above or below the previous day's range, I'm always looking at those weekly, monthly, and yearlies as potential targets. Now, when we break above, okay, let me go to a 15 here. All right, so when we break above the previous day's range and you see clear higher high, higher low, momentum into pullback and pause above the previous day's range, that's telling us that we have obvious short-term bullish momentum. As I said, doesn't matter if it's a 1 minute, 30 minute, 50 minute, doesn't matter. Those momentum into pullback and pauses is where we look for our entries. But if it's not obvious, we do not trade. Next, if you're going to see bearish momentum, you are going to see lower highs, lower lows, momentum into pullback and pause below the previous day's range. Okay. Next, let me go down to a 5 minute, see more structure. Now, if you see price within the previous day's range, that means that buyers and sellers agree on price and we have a neutral bias day. Okay. Now, here are the setups that I look for, and then we're going to put it all together. Number one, if we have strong momentum, rejection at the top third, I am looking for a bearish fade trade down to the middle or bottom. If we get that big momentum down and bullish rejection at the bottom third, I'm looking for a fade trade back to the middle and top. If we get strong momentum, but we get a fake out breakout, sort of like this. So we had 2 fake out breakouts. See, look. Here, couldn't hold it, and down. And then at the bottom right here, you had strong momentum, and look at that beautiful fake out, breakout, fade back to the middle and top. So what we're looking for is the tools quickly tell us, do we have short-term bullish momentum, bearish momentum, or do we have a range? Ranges, we look for top third, bottom third, fake out breakouts at the high and low. I do not want to trade the middle of a range. And when you're part of the Earn the Right to Trade Live process, you're going to be looking at hundreds and hundreds of charts. You're going to master this process. The tools are going to help you master the bullish momentum, bearish momentum, range setups, and no edge. Now, when I say no edge, it means this. You see this sideways, choppy crap? When you identify that, what you're going to be doing is just literally boxing it, and you're going to do nothing until you see movement. Remember, we need movement. We either get movement into rejection at the top bottom third of the range, or above or below the previous day's range, we get momentum into continuation, bullish momentum, bearish momentum, okay? So now that we understand the rules of engagement, how the markets work, we now understand our numbers, which I gave you. Number 3, I gave you, again, how to identify bullish, bearish, or ranges, and then the setups. Now let me show you the 3 steps to any symbol you want to look at. All right, first thing I'm going to do is, in step number 1, I'm going to go to the weekly, and the reason I go to the weekly in step number 1, I got to see what the main trend is. Okay, the main trend is bullish. It's moving lower left to upper right. If you're questioning that, then you need to tell me why. Okay, next, I put in red horizontal lines. We call these decision points. They only come from the monthly and weekly. Okay, and what they mean is when you see red and green candles that pause and prices left quickly, we call those decision points. Okay, so right here, this area here. Now, what this tells me is that we're basically sitting in this kind of range from about let's just call it 5,000 to about, 5,400. Now, when it comes to ranges, what do I do with ranges? Bottom third, top third, fake out breakouts until price can break above or below. I do not trade the middle, no matter what time frame. So right now, we're kind of in a range on that S&P. Next, step number 2, I'll go to anywhere between a 15-minute and 60-minute. And what I'm going to look at is I have my decision points on now, and now I have also my levels, previous day's range, weekly, monthly, yearly, and decision points. And remember, anytime these levels are close by, they can either be zones or they're targets. All right, so in step number 2, I squeeze the chart, and by the way, this yellow line is where the week starts, and we can clearly see when you squeeze up the chart. Let me go to here. You can see the main trend is up. Short-term pullback. We're trying to now make higher moves, and now we're kind of going sideways. Kind of closed the week going sideways. Closed it. We're going bullish, and we closed Thursday, Friday in a sideways momentum, and it closed as an inside day. All right, so step number 3, I'm going to go somewhere between a 1 and 10 minute, okay? And this is just so I can see more structure, but I never lose focus on the main trend on the S&P is bullish, and I never lose focus within the small. Like the 3-minute, I'll always have maybe a 30-minute next to it. All right. Now the tools quickly tell us what the short term is. So let me ask you a question. If the main trend is up, what's going to be our highest probability trades? Looking for pullbacks to go long. Now, we have to use the tools to determine what's going on. Okay. So remember, we trade between 8 and 12. Right here, we don't trade in to-dos. And we're coming in usually between 7 and 8, somewhere right about here, to do our pre-market. So what happened here yesterday in the S&P? Well, we came in, we did our analysis, and we were talking about that we're inside the range, we're in the middle, just exactly we don't want to trade. If it's a range, our favorite trades are going to be top third, bottom third rejection, fake out breakouts, or until price breaks out, with the highest probability trade being pullbacks to go long. Why? Because the main trend is long. Remember, anytime is short term. If I short the S&P short term, that means I'm counter trend trading. What did I talk about with counter trend trading? I said if you're even thinking about it, number 1, you better be consistent for at least 6 months going with the trend. You better have mastered, again, the price action, the plan, the strategy. And number 2, you better have back tested those counter trend trades over a body of work to show that you can prove you had an edge. Now, today, On Friday, we got a beautiful, beautiful trade. We got what's called the fake out breakout that I show you guys every single day. You had strong momentum. It looked like the sellers had it, not so quick. We wait for the turn, double doji into there, and then you got this incredibly strong candle. As soon as price broke above, your stop goes below the level, and the most recent candles and above that, and then our 2-to-1 right here was hit. All right. So for me, all you need is one good trade per day, and the absolute only trade you needed yesterday was this one right here on the S&P. That's it. And you were literally done for the day. This trade went from about 53.53, you're 2-to-1. I mean, you're talking almost 30. Okay, and remember, it's $50 a point, one contract. It's almost $1,500. Okay. Now, again, we trade futures and we also trade options on ETFs. And when you're part of the Earn the Right to Trade Live, we will help you figure out whether you can do both or one is better than the other. And also the third option is just buying the ETFs, just buying shares. All right, so now that we understand this, now let's go look and see. And again, I'll be back with you guys Monday morning then to go through the game plan and getting ready for the day. So now let's go through the other symbols and let's go see what transpired. All right, so remember, step number 1 in the Trade90X Earn the Right to Trade Live process. And again, if you go to our YouTube channel, I've got a ton of videos and I'm going to be coming out with a bunch more breaking down all aspects of the Earn the Right to Trade Live. Okay. One chart strategy. All right. So here you go. So we are bullish. Okay. Lower left, upper right. Where has price literally paused most recently? Red and green candles and then took off. So here we go. It was here, and now we're kind of retesting that area. But I'm going to move it up here since we have this kind of pause right now. All right, so here are my decision points. Step number 2, go to the 30-minute candle, squeeze it up. And what do we have going on? Same thing as the S&P. We know the main trend is up. And now we've had a pullback, we've had a reversal, and we're trying now to break out based on this last week's action. All right, so the last 2 days so far, all the indices seem to have been, it closed, bullish momentum, and now it's in a pause. Okay, so not a lot of great trading. And let's go to step number 3. I'm sorry. Number 1 is the weekly. Number 2 is that anywhere from a 15-minute to 60. Then I'll go anywhere from a step 3, 1 to a 10-minute. Again, putting in the 8 o'clock right here. And we can see that when we came in yesterday, sideways, no edge price action. And then the same thing, NASDAQ gave us that strong, remember, your job is to understand, and here, remember what I talked about? When you have weekly, monthly, yearly, or decision points so close to the previous day's range high or low, I zone them. Okay, so what did price do yesterday? We had some news yesterday. Looked like the sellers had it. And then we got a setup in the bottom third. You could have traded it here or here. And NASDAQ gave you beautiful round trip back to the middle and high. And then look what happened here. You got a fake out breakout at the previous day's high. And then we went the other way. So the 2 best setups yesterday were here. Only problem with this one I'm showing you here, it was in the afternoon. We're usually done by 12 o'clock. This trade right here in the NASDAQ was all you needed. Okay, this trade gave you almost 100 points. Okay, NASDAQ is $20 a point. Do the math. Nice trade for the day. And again, It's a matter about being patient. And when you're part of the Earn the Right to Trade Life process, you know what to look for. You have the discipline, you have the statistical edge, you know the data, you know the rules of engagement, you know your numbers. You have a set of tools that quickly determine whether we're bullish, bearish, range, or no edge. You have setups for bullish momentum, bearish momentum, or range setups. You have three-step process. All right, let's go to the Dow. And again, I'll be in on Monday morning and we'll go through the charts and get ready for the morning. I do it every day. Okay, let's go to the Dow. What's happening? Well, the Dow is definitely a little bit more of a pause than the S&P and NASDAQ, but we're still moving lower left to upper right. And all that's happening is that we are in a range. And we look at those decision points where the red and green candles have paused and move quickly. And the Dow is basically in this range from 37, whatever it is, 4 up to about the 40,000. And what do we do in ranges? No matter what time frame, I don't trade the middle. I'm looking for bottom third, top third, fake out breakouts until price can prove it can get above or below. That's it. There is nothing more to think about. And if it's in the middle, indecision, no trade. Step number 2, go to the 30-minute. Squeeze the chart. You can see that the Dow, a little bit more so, has been a little bit more range bound than the NASDAQ and the S&P. Let's put this there. And then looking at this week, you can see the Dow definitely had more of a bull bias this week. All right. So now let's go to step number 3. Put in that vertical line at 8 o'clock. Where are you? 8 o'clock. This is where we like to, again, between 7 and 8 is where we're doing our pre-market. 8 to 12 is where we execute, and then post-market when we're done. Routines are critical. So what happened here? So when we came in yesterday between 7 and 8, we talked about it. It was no edge price action. It's sideways crap. It's in the middle of a range. It's a range day. And then look what we got. All the indices yesterday gave you unbelievable setups. Look at this. Momentum, fake out, breakout, beautiful setup right there. Beautiful. You got the little pin bar candle right there. Beautiful. Where are your targets? Targets were here to the middle and top. And again, your stop for me was either, you could either put the stop here, or depending on your rules, below the most recent candles. I don't mind going halfway on this one, especially with that multiple rejection. And then up to the top was already 3 to 1. Beautiful. So remember, all you need is one high probability setup. And to me, that was as good as it gets right there. Okay. Let's go look at the Russell. Same thing. Remember, it's rinse and repeat. Go to the weekly. Now we can see bearish range, bullish momentum, but now we're just in this big sideways consolidation. And this stock has been consolidating for a very long time, tried to expand. Now it's consolidating between 1900 and 2170. What do we do with ranges? I don't trade the middle. Top third, bottom third rejections till fake out breakouts until price can prove back to bullish or bearish momentum. And again, if you are a bigger term trader, because this has mostly been in a range, that could have been your top third rejection if you were a bigger time frame Russell trader. Let's go to step number 2, 30-minute. We have our decision points, we have our tools, and we squeeze the chart up. And what's been going on over the last few weeks? Very sideways on the Russell. All right. And what's the week been looking like? It's more sideways than the other indices. And again, let's go to our 3-minute, put in your 8 o'clock. Right there, create news. And again, like the other indices, it was basically sideways crap. And actually the Russell Because it was a range, you can see, and we were more bearish. So this was a beautiful setup. If you understand the context of this, so we had this strong momentum below showing us short-term bearishness. The overall trend is basically it's been a range. So when we have a range, we can take both sides. So look at this. You had beautiful, beautiful momentum and then pull back right back to the previous day's range high. And there was your short right there for the rest of the day, right there. That was, for me, the only A setup yesterday in the Russell. All right. Any questions about that? Hit us up at hello@trade90x.com. Let's go look at other symbols. Let's go look at crypto. And Bitcoin's actually live right now. So let's see if we see a trade as I do this. So again, let me pull this off. Your job is on the main trend. What's going on? Well, we're moving lower left to upper right, and now we have some short-term consolidation. There we go. Short-term consolidation. And I've been doing this now for quite a few, I've been doing this over a year, but on Bitcoin, I know I've been talking about this already. We're in a range. What do we do with a range? Top third, bottom third, fake out breakouts until we break above. Now remember, I'm going to fade these trades, bottom third to go long. Why? Because the main trend is up. Fake out breakouts, fade to go long. Or if we finally break above and start making higher highs, higher highs and, higher lows, then I'm going to be looking to uncharted territory to new highs. And I'm really not interested in a bigger time frame short unless we really start doing this. Okay. So right now, Bitcoin is in a range. It could literally do this for months. Until it shows us something else, you need to understand that context. Now, if you're a shorter term Bitcoin player, you might be able to find some trades within that range. So what's it been doing over the last few weeks? It was bearish, it was sideways, now it's bullish, it's kind of sideways again. Let's go to the 3-minute and see if we had any shorter term trades yesterday. This was Friday, and this is today. So what do I talk about? I don't like to trade the middle. And again, what was price doing? It was in a range. What do we do with ranges? Well, number one, we look for top third, strong momentum rejection at the top third, bottom third, or fake out breakouts until price can break out. And because it has more of a bullish bias, the bullish trades would definitely be the higher probability. But again, if you've proven in your back testing that, number one, you're a statistically edged proven trader and you understand the risks of counter trend trading and you've mastered it, then these were two setups right here. Your fake out breakout rejection, and you also had a zone because you had multiple decision point in a weekly, very strong level. Now, what's going on today? Today is no edge, crap price action in the range. So what am I looking for? I am looking for momentum into top third rejection, momentum into bottom third rejection, momentum into fake out breakout on the top or bottom until price can prove it can get back to bullish bearish momentum. Are we clear? Awesome. All right, let's go look at the US dollar. Not that I trade it, but I like to always know where it's going on, what's going on with it. So look at the dollar. It's been a lot of range price action. Look at that. Remember we do it ranges, equal highs, equal lows, box the area. There we go. And then we have the expansions. There we go. So the dollar is basically in a range. Again, what do we do with ranges? Not in the middle, top third, bottom third, fake out breakouts. Now, typically, if the dollar is moving higher, that's usually bearish for markets. Not always, but just keep an eye on it. If it's moving down, it's usually bullish. So just always want to know what the dollar is doing. All right, let's go look at oil. All right, so first step, go to the weekly. Bullish, bearish. Now kind of just been ranging. So what do we do with ranges? And you got that kind of bottom third. Let's put it there. and some expansions. There we go. And again, oil has basically been in a range. What do we do with ranges? Top third, bottom third, fake out breakouts, top and bottom. Do not trade the middle where it is now until price can break back to bullish or obvious bearish momentum. And that's it. Okay. Now, if you're a short term, remember this is a range. So when the overall trend is a range, then I don't mind taking both sides. All right. So now that we have that, the last week or so, it started bearish, and then the buyers tried to bounce. Let's go to the 3-minute. The oil opens up at 9 o'clock. So we'll do that right there. And when it came in yesterday, we talked about it. There was just no edge. Yeah, it's just choppy price action. Oil really just not the best setups. Not the best setups. A lot of choppiness. So not a lot of good setups there. Let's go look at the euro. Again, I'm looking at multiple asset classes. Let's go to step number 1 on the weekly. It's always the same. So the euro, let's see, bearish, a bullish leg, and now it's in this very kind of tight range. Look at that. Tight range. So what do we do with ranges? Again, equal highs, equal lows. I don't want to trade the middle. Top third, bottom third, fake out breakouts until we can break out. If you're going to trade short term, let's see. But we do have a very tight range. And we can see for the week, it was kind of sideways, and the price action was crappy. Nothing there. Listen, if the price action gives you no edge, why are you trading it? Let's go look at gold. All right, same thing. Let's go to the weekly. What has gold been doing? Well, it was in a range for 4 years. Now it's broken out. So we have this momentum, and to pull back and pause, and we use our decision points with the red and green candles, basically paused. And again, right now we're in a range from about 23 to whatever this is, 2045. If we break above, we're in uncharted territories. Higher high, higher low, looking for that bullish continuation. If we break below, and then we have potential decision points here and here. Okay. Remember, ranges, bottom third, top third, fake out breakouts. I don't want to trade the middle until we can get price to prove itself above or below the range. And then again, I have some decision points below, but we have uncharted territory above for gold. Let's go look at bonds, and then I'm going to do a few stocks, and then we're going to go back to enjoying our weekend. So no different. Bonds, lower left, upper right. We can see this area right here. These are important decision points where price paused, took off, price paused and took off right here and here. These are the two main ones. Let's go to 30-minute. And we have our decision points. And when we squeeze up the chart, what has bonds been doing? And you can see it's been going bearish and bullish. It's kind of going back and forth. This last week and a half has definitely been bullish, and then we just kind of fell off. And again, when you get a big drop like that after a big trend, that can be definitely a reversal of trend, but we'll see. You never know. Okay, bonds open at 820, but we had that news, so we'll leave it right there. So really, bonds had nothing. It had basically no edge. News dropped, and then you just had this crap right here. Sideways, no edge price action. When you see that, you pass. You do not trade. All right, let's go look at a few stocks. All right, so definitely some stocks that have been one that I've been looking at a lot is because I own it, and also it's a Bitcoin miner. And right now, like I said, Bitcoin is definitely definitely the volatility's there, so makes for definitely good long and short-term opportunities. All right, so Mara, I want you to make sure you snapshot this. Whenever you see this above or below or a mini one like this. These are basically showing parabolic or potential reversals. So right now, Mara, downtrend, consolidation, trying to break up, but couldn't. We now have sideways definite price action right here between 13 and about 30. So until we really can get above or below that, definitely important, ranges right there. Let's go down to the shorter time frame, step number 2. And we can see this week or last week, I've definitely been more sideways. Let's go to step number 3. And I'm going to use a 2-minute because there is no overnight. And you can see that Mara, again, just listen, read the price action. You've had this parabolic move, has more of a kind of a bearish bias right now in the main trend. So what does that tell us is that when you get those bearish setups that are clean, and this is beautiful, look at it. We started inside day sideways, and again, we didn't have bullish momentum. We didn't stay inside the range. We came and we had a break and retest. This was a beautiful short. And then look at that. It gave you a target. And what I talked about, those weekly, monthly, yearly decision points above and below are potential targets. I mean, listen, all you need is one setup. That was it right there. And sometimes also you have to be patient. They don't happen right away. Let's go see Apple. Okay, let's just look at the main. These are the main symbols that people are trading. Here we go. Apple. Again, the main trend. And again, remember, price moves in repetition. It goes from bullish momentum, consolidation, back to expansion. We call it expansion, consolidation, consolidation. And right now it went from expansion and now it's been in consolidation in the full year of 2023. And these are the areas right here, again, where price is paused most recently and taken off, and you have a range between this 163 and let's see here, let's put one here. Yeah, between that 196.99 area. So what do we do in ranges? Top third, bottom third, fake out breakouts until price proves out. So the last opportunity was right here. And again, it favored that because we had bullish momentum. So what are the trades? What are going to be the highest probability trades now? Number one, we break it back above and we go to bullish momentum into continuation, going into new uncharted territories, looking for those momentum and pullback and pauses. Or the bottom, looking to fade, fake out, breakout, looking to fade. Those are going to be on the weekly, your favorite trades. All right, let's go to step number 2 and what's been going on so we can see clearly during the week. And Apple's been in an upswing. Let's go to the 2-minute, step number 3. And did we have any trades? Well, we know the main trend has more of a bull bias. So taking bullish trades are definitely higher probability until proven otherwise. And look at what we had right here. You had strong momentum. The sellers rejected, but then look at that. Buyers said, I don't think so. With a pin bar right at that previous day's low, you have a double bottom. That's a beautiful setup right there. Once price got above, and I always give it a little wiggle room. Especially if I have levels and I look at the candles to the left, and then 2 to 1 or the middle was your first, and this trade went all the way to, it gave you 4 to 1. Beautiful trade. And again, you can either trade just the shares or trade it with options. Okay. And when you're part of the Earn the Right to Trade Live process, you'll learn more about that. Now, NVIDIA, let's go through. I'm just going through. Listen, I'm going through all the asset class and the most popular symbols that we like to trade. We are more specialists, and you should be too. The less is more. Stop trading flavors of the day. All right. We're moving lower left up right. Any question about that? Cool. And you see how we go from momentum into pullback and pauses, momentum into pullback and pauses. Okay, now here were the last areas where price to decision points where you had red and green candles right here, and now we've taken off. So right now, there's nothing to do until we get a pullback. Let's go to our intermediary, see if we had trades there. And we can see over the last few weeks, no doubt, NVIDIA has been on a tear. And again, using our tools, how do we find a trade? Well, we know those bullish setups are definitely, and on Friday we had an inside day. Let's go to the 2-minute. And again, using your tools, did we have bullish momentum? No. Did we have bearish momentum? No. Did we have a range? Yes, we did. Where did the range? Was it top third, bottom third, middle? It was right here. It was right here. So now you had a beautiful pin bar right here, candle right here. These could have been your setups. And it definitely did work out after this sideways consolidation. So, that's part of trading. That's what happens. It doesn't always just go the way you want right away. Let's go look at Microsoft. I'm just going to do a few more. Again, it's rinse and repeat. Step number 1, go to the weekly. Is it bullish, bearish, or range? It's bullish. It's moving lower left to upper right. What is price doing right now? Where are the areas where price has paused with red and green candles right here and here? And again, we use sideways price action. Again, top third, bottom third, fake out breakouts until we can break out. The highest probability trades are going to be bottom third or the fake out break at the bottom until we can break out. Okay, on the weekly, if you're a shorter term trader, let's go see if there was any scalp trades. And again, Microsoft this week has been moving lower left to upper right. And let's go to our step number 3, 2-minute. And not really, again, this is just sideways price action. I'm not interested in this choppy sideways price action. Next, we pass. Let's go to Meta. Let's go right here. First step, you go to the weekly, main trend, moving lower left to upper right. And then again, where are those red and green candles where price is paused and taken off? Well, right there and there. All right, so let's go to the 10-minute. Let's see if we have a trades. So this week we're moving lower left to upper right. Let's go to 2 minutes. And did we have a trade yesterday? And again, did we have bullish momentum? No. Did we have bearish momentum? No. We had a range. What do we do with ranges? Top third, bottom third, fake out breakouts at the top and bottom. I don't want to trade the middle since the bias was long. Here was your setup. There was your setup right there. Bottom, double bottom rejection, engulfing candle. Right there. It doesn't get any better than that. Where are your targets? Remember, if you're at the bottom, you're looking at the middle and top. If you're at the top, look at the middle and bottom until price can break out. Let's do Amazon and Google. All right, so here you go. Weekly. Again, what is the main trend? We are moving lower left to upper right. What's going on now in the short term? We see a lot of just sideways consolidation. This is the area, again, where price with the red and green candles paused and took off. And again, very tight range with ranges, bottom third, top thirds, fake out breakouts until price can move us, and again, if we can't figure it out, I don't want to trade the middle. This is a little bit choppy. So this time frame, not much to do. Let's break it down to the smaller time frame, see what we saw. So again, we know this week we're moving lower left to upper right. And price, let's go to step so we can see it. And again, ask the questions. Where did we start? We started off in the middle of a range. I have no interest. We started as a range day. We had strong momentum break and retest. That was your setup. And then we hit the weekly target above. And that was, to me, the only setup. Okay, let's go do one more. I'm going to do Google. Let's go to the weekly. All right, so again, it's moving lower left to upper right. Where are those areas where red and green candle and price took off? All right. So we know we have more of a bull bias. Okay, there's no doubt about it. Let's go to the 10-minute. The main trend is up. Now, this week, we had mostly a bullish week. And if you put your trend line in, you can see that we actually broke trend in the short term. And we are below. Let's go to 2-minute. Now, this is what we would call counter trend trading. But again, I don't recommend it unless you are a seasoned, profitable trader that has mastered the earn the right to trade live strategy, and you've also back tested the strategy of counter trend trading and it's proven an edge. And if that is fine, then I have no problem. But newer traders, no business. And again, most of the day, this really wasn't, it just traded in the, right here, just traded in a sideways range. And then finally, at the end of the day, you got a beautiful setup if you trade, but really during the day, really not much. You know what? I got some requests. I'll do it. I don't usually do the flavor of the week, but I'll just show you a proven point. This works on anything. So here, the weekly. So we can see, the big move up. Again, remember I told you, master that look because that is parabolic right there. And then we moved down and then we went back into the accumulation consolidation phase. And then we had, there we go, break and retest right there. And basically you have this long wick. Let's go to 10-minute and not, for me, yeah, I mean, it's okay. That's not a great setup, but if you want to day trade or scalp it, let's see what kind of setups you had. So remember what I talked about when you get those parabolic looks, short term and long term. It looks like right there, and no wonder we dropped right there. So, but I will say these were actually not bad setups. I don't see. Again, we went from an inside day to an outside day, break and retest. We went from right here, momentum into break and retest above the range. And then we went into a parabolic move and bingo at the top third. So nice short day yesterday. Listen, if you understand the rules of engagement, how markets work, if you understand numbers, if you understand the tools right here that I give you that quickly tell you if we're bullish, bearish, or range trades or no edge, then you understand this. Okay. If you don't, then you have a lot of work to do. But again, I recommend you be a specialist, trade less, not more, trade smaller size, not larger, trade the same symbols over and over. All right, so let's go back to the ES. Let's go back to the ES and wrap it up. All right, so again, what did we do? We looked at the news, we looked at the earnings, we looked at fear and greed index, we look at all the data to kind of understand what is that main trend versus short-term trend? Who has control? Well, right now, the long-term trend is up. The short-term is definitely having some indecision. The long-term is definitely proven, to have a bullish bias. And then going to the charts, again, I showed you how we look at the monthly and weekly. On the S&P, they're bullish, and you can use this for any symbols. The daily right now is momentum into pullback. It's kind of in a pause. We don't know yet. We don't have enough information, but we definitely have more of a bull bias. And then using the Trade90X earn the right to trade live process, using our rules of engagement, using our numbers, using our tools that are predictive, not lagging, that can quickly determine whether or not we have bullish momentum, bearish momentum, range price action, or no edge. We can see very clearly the main trend on the S&P is up. The short-term trend absolutely has been up, but we closed the week sideways range is what we closed, and we closed it inside the range. And again, when we use the tools will quickly help us determine setups for bullish, bearish, or ranges, as I talked about. always the highest probability. If the main trend is up, the highest probability is looking for short-term longs. If the highest probability in the main trend is bearish, and the highest probability short-term trade is going to be bearish. And we can use the tools to quickly determine that. And again, if there's something that you did not understand, how we broke down with all the data, with the top-down approach, and then the Earn the Right to Trade Live one chart strategy that will work on any symbol. It quickly tells us the main trend versus short term. And then with the tools allows us to be able to find the high probability trades. Then hit us up at hello@trade90x.com, or go to Trade90X Instagram page profile and book a 15-minute free call. Again, I can only lead the horse to water. I cannot make you drink it, but this is $1,000,000 stuff. I give it to you every day. I don't hold back. I want to see everybody succeed. With that said, go enjoy the rest of the weekend. I know I'm going to, and I'll be back with you Monday morning.